Boom. Alrighty. So, the Bitcoin stock market decoupling isn't happening yet, but it totally will. This is an opinion piece from CoinDesk. And as we speak today, obviously it's a holiday, so prices are up in cryptocurrency, which is super nice. For US-based readers, I hope you're lucky enough to have a long holiday weekend to enjoy. If you do, remember that you're given this day off because of military personnel gave their lives. And we already did our moment of silence at the beginning of the show, so thanks everybody that participated in that. I'm personally taking this long weekend to see one of my closest friends get married. So this week's newsletter will be short, sweet, and a bit off the wall, and mostly statistically insignificant. Like I said, this is an opinion piece. When I asked one of my other closest friends how I would convince y'all to read something like this, he gave me some great advice. So please let me write about the decoupling. Indulge me. You're reading Crypto Long and Short, our weekly newsletter. The decoupling, the latest iteration of hopium for Bitcoiners and crypto natives. When it finally inevitably happens, it'll be up only for big crypto and down only for big fiat. But what it actually means is a bit funny. The decoupling is the moment when Bitcoin's price diverges from equities and starts going up when equities go down, and vice versa. The decoupling is the moment when Bitcoin and equities become negatively correlated to each other. Bitcoin will go to $1 million a coin and equities will spiral to zero. It's a bit funny because Bitcoin was uncorrelated to almost all macro assets not too long ago. We wrote about this in our 2021 research report. Here's the chart we shared in the report and the accompanying text. For the record, correlation simply means how much two measures vary together divided by how much they usually vary individually. We care so that we can describe the relationship between the returns of Bitcoin and other assets. The correlation coefficient, the number or the R referenced, relates to the strength of the relationship in the context of asset returns. A correlation coefficient of +1 means when asset A gained X%, asset B gained X%. 0 means when asset A gained X%, asset B gained Y%, with an absence of a linear relationship between X and Y. -1 means when asset A gained X% and asset B lost X%. A 0 correlation coefficient signifies uncorrelatedness, and it's either rather easy or rather difficult to imagine unless you have a chaotic mind. Either all the numbers in the data sets are exactly the same, a constant, which is mathematically defined as undefined correlation, or the data set looks like utter chaos. Actually creating an arbitrary data set with 0 correlation is not easy. So I included the boring data set and an illustration of chaotic case to drive the point. So 0 correlation and for the boring case or whatever. No correlation example. I got some allergies today, so I gotta slow down and drink some water. Being uncorrelated is awesome, but wouldn't it be fascinating if Bitcoin was negatively correlated to stocks? And then when that happened, stocks all went on a hell train path to 0 and Bitcoin went up and up forever. That's the decoupling. The decoupling would force traditional financiers to start thinking about Bitcoin as a risk-off asset. Yes, less risky than stocks. The volatile digital cash that mainly acts as a vehicle for speculation now will become less risky than stocks following the decoupling. The decoupling is also supposed to be aggressive, gradually then suddenly is one of its calling cards. Unfortunately, 2022 has smashed the dreams of an aggressive decoupling. Here are the 90-day trailing correlations in 2022 between Bitcoin and the S&P 500 and NASDAQ Composite Index. This clearly isn't the decoupling, but it does look interesting. In 2022, these stock indexes moved from a weak positive correlation to Bitcoin into the positive strongly correlated band, which is greater than 0.7. While not as potentially impressive as a strong negative correlation would imply, Bitcoin's return profile still resembles a macro asset we haven't quite seen before. Just a year ago, the S&P 500 and Bitcoin's correlation coefficient was negative and close to zero. Correlation moving from near zero to strong in a year is remarkable. On top of that, the correlation was strongly negative back in 2019. I'm just going to postulate that I think this is directly related to, of course, all of the new financial institution interests, the traditional finance markets being interested in Bitcoin in general, in combination with, of course, the bear market within cryptocurrency. And the reason why it wasn't as strongly correlated previously is because of the effect of course, the halving of Bitcoin and the traditional super cycle, which is throwing things off from their perspective. So they don't understand that yet. We don't understand the impact of them yet. And so this is kind of where we end up sitting, right? In this kind of weird space. So yes, Bitcoin is unique. And thus it bears repeating. Bitcoin is unlike any other macro asset we have seen. This all reads like a whole lot of nothing aside from Bitcoin's uniqueness, which we already knew. But there was something quite remarkable and statistically insignificant I saw last Wednesday when flipping through some charts. I saw this. And so I think Bitcoin USD and SPX. There it is, all the way to the left of this chart, the first signs of the decoupling. When decoupling? Maybe soon. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.